that interest rates will always be the main topic of discussion because they shift and change monetary policy based off the interest rates. Um, so everybody's going to constantly be talking about interest rates because they impact housing, how much you can borrow, how much lenders are willing to give out, and at what rates. And this video here is talking about housing mortgages. So let's take a look at it.
For Americans looking to buy a home, the interest rate on a 30-year fixed rate mortgage experiencing its biggest weekly drop in the past year. And Elizabeth Schulze is here with more on that.
So from what I know, right, mortgages are usually forecasting on what they think will happen in the marketplace. So since there is a rate cut, that there's a 90% probability that there will be a rate cut in this September's meeting, mortgage rates have already adjusted from 7 or 6.5 to now 6.32. So more than likely there will be a rate cut because usually mortgages are forecasting what the rate cuts will be coming. And so they already know it's a rate cut coming. So they've already dropped the rates on the mortgages.
Good morning, Elizabeth.
Good morning, Rebecca. Mortgage rates now at the lowest level in nearly a year in anticipation of an interest rate cut by the Federal Reserve next week. The average rate on a 30-year fixed mortgage now 6.35%. For most of the year, we've been hovering closer to that 7% range. And this really does make a difference when you're looking at your budget. A $400,000 home loan, 20% down payment. Your monthly payment now is going to be about $138 cheaper.
The first thing that jumped out was they're calculating their average cost based off a $400,000 home loan. Don't be fooled to think that you got to go out here and get you a $400,000 home loan. If that's the message that they're telling people, that that's the new starter home, then that is absolutely incorrect. And of course that varies on a per market basis and where you live basis. But man, go get you something that is affordable for you in your current budget. You can buy a home for $100,000. You can buy a home for $200,000. You can buy a home for $300,000. But for them to start at that high price point, knowing that majority of the Americans, average income cannot afford a $400,000 house is insane.
Than it was in January when we saw those rates at 7%. But home prices are still at record highs in many U.S. cities. No doubt this is still a very challenging market. And we have some new exclusive data this morning from real estate firm CBRE that shows just what that looks like. The average monthly mortgage payment on a new home right now, about $4,500. A new apartment lease on average, $2,200 a month. In other words, it is more than twice as expensive right now to buy than it is to rent. If you are trying to buy or refinance this fall, might be worth considering an adjustable rate mortgage, guys. Some of those rates are below 6% rate.
That's interesting to see that new mortgages at $450. You could tell that these mortgages and these leases are in, areas that have probably seen a lot of development already. In my current market, Detroit, I think our average mortgage rates are probably somewhere between $2,000 to $3,000. New leases, depending on what you're going for, right? 2 bedrooms, 1 bedrooms. On the lower end, you got 2 bedrooms starting at like $1,600. 1 bedroom is probably somewhere around $1,200, right? So that's just context, right? I wish they would have said where these numbers were focused at, because every market doesn't have these average monthly costs, right? And that's just to be clear across the board. The second thing she said was about getting an adjustable rate. Absolutely no, right? I would not, unless it's a very, very, very short term. And even then, I'm just leery of adjustable rates because I understand that adjustable rates float with the market, and the market can float itself, right? Sometimes there is a lot of uncertainty in the market and those rates can jump a lot faster than you would like. For example, back in 2008, there were a litany of things that caused the economic housing crisis, but one of them was that they had all of these adjustable rates. For example, my family, right, they lost their home because they couldn't afford it no more. My parents, they kept their jobs, but they had an adjustable rate. And so the mortgage that they could afford with their current jobs, even if they work less hours, they can still afford it. But when that adjustable rate started to balloon, it just became insane to even keep paying for it, because who got $3,500 a month? Who want to spend a whole salary on living somewhere when they can just let them foreclose on it and go live somewhere for way cheaper, right? So I would never go get an adjustable mortgage. You know, I don't believe in getting an adjustable mortgage. I'm going to always get that fixed rate and lock it in, knowing that, right, this is what I know I got to pay on a monthly basis versus having some uncertainty come October and I got to pay an extra $1,500 because rates jump.